Consumer inflation remains well within the Reserve Bank's target range of 3 to 6%, boosting chances of another interest rate cut. The low demand in the economy will likely keep inflation below the midpoint of the target bracket. The central bank expects inflation to average 3.3% this year.
We do believe that we should possibly see these numbers stay at these levels or even reduce, particularly if you look at the currency, which recently touched 1650. We're used to a currency over the past 4 or 5 months, which was above 17 rands to the US dollar. Any strength in the rand will negate any upside pressure going forward. And I do think that as part of the bigger picture conversation with the Reserve Bank, the guys certainly have a little bit more room to continue to keep interest rates where they are. I don't expect any interest rate increases for this year and potentially maybe into the rest of next year if the inflation numbers stay where they are and if the currency does strengthen.
Producer inflation accelerated to 2.4% in August from 1.9% in July. The main drivers of the annual figure were the food, beverages and tobacco products and the transport equipment categories. It's expected both the producer and consumer inflation will remain muted for the remainder of this year because of the lack of demand in the economy. NAMSA data shows new vehicle sales continued to improve in September. Just over 37,400 units were sold over the month, reducing the annual rate of contraction to 23.9% from 26.8% in August. It's expected the gradual recovery will continue, supported by low interest rates. The ABSA Purchasing Managers Index, measuring the health of the manufacturing sector, shows conditions continue to improve in the sector. The PMI ticked up further to 58.3 index points in September. The shift to a lower lockdown level mid-month has slightly driven the further improvement in business conditions.
The recovery in the manufacturing sector that started when most of the lockdown restrictions started to be lifted has been sustained through to September, with most manufacturers certainly reporting that when you look at production in the month, it was certainly a little bit better than what they saw in August, which I think is a really encouraging signal, particularly given where we're coming from in the second quarter. One of the things that we also saw in the data was that the additional easing of lockdown restrictions that has happened in other sectors also appears to have boosted demand a little bit.
The Reserve Bank's quarterly bulletin shows government debt surged in the first half of the year, while revenue contracted sharply. Total gross loan debt of national government went up to 3.4 billion as at the 30th of June, representing a notable year-on-year increase of 18.7%. The increase reflected a rise in the stock of both domestic and foreign currency-denominated debt, with foreign debt increasing at a faster pace than that of the domestic debt. The quarterly bulletin shows government revenue contracted sharply while expenditure rose. SARS data shows the trade surplus expanded to 38.9 billion rand in August from 37.2 billion in July. Exports rose by 6.6% and imports were up 7.4% over the month. Economists say the patterns in the trade statistics reflect the effects of the COVID-19 lockdown and the gradual opening of the economy. Gloria Safakomusi, SABC News, Johannesburg.